All right, guys, give me a thumbs up if you can hear this. No thumbs ups. Can you all hear me? All right, we still got some people trickling in. If anybody on the Discord can shoot me a thumbs up to let me know that you guys can hear me, that'd be great. I'm gonna post a couple things in the chat. Okay, on the chat is the proptrader.co website that has a lot of smart money concept stuff on there. It's where I get my optimal trade entry fib settings. There's also information about all the acronyms that are used in the smart money teachings. So one-stop shop for many smart money concept stuff. Specifically, what I use it for on this pregame show is the smart money concepts time frame analysis table or chart that's on there, and what I use that for is to post it into my chart directly, and so that we can see the things that we're looking at for. Oh, all right, thanks Prometheus for the thumbs up. Glad you guys can hear me. Again, welcome. So on that website, I grab the snippet tool, I grab my smart money concepts time frame analysis right from that website, and I post it directly into my chart, so that when I'm setting up my chart for the week ahead, and this is how to do this without any indicators, the things I'm looking for are already here on the chart, so I can easily chart those. So we're going to be doing this with Tesla. I think we'll have time to do it with SPY as well. Usually I only do it with those two, but the concepts can be used in any kind of high liquidity asset that you might be trading, like the Mag 7, NASDAQ, IWM, any of those. You can use the same concepts as well. So before we get started, or actually let's just get started. First thing we're going to be looking at is we're going to be on the weekly chart. And on the weekly chart, first things we're looking for is to identify the next draw on liquidity. DOL stands for draw on liquidity. We're going to be looking for buy side liquidity, BSL, sell side liquidity, SSL, equal highs or equal lows, or a fair value gap somewhere inside the weekly time frame. So how we're going to draw that on our chart is we're going to use our tools in TradingView or whatever charting method you're using. I'm going to grab, I use the horizontal ray. You could use the horizontal level if you'd like. That's your call. And I'm going to look for the next draw on liquidity. I'm just going to go down my list. Okay. Buy side liquidity is going to be wicks off the top. Sell side liquidity is going to be wicks off the bottom. So we're heading into a new week. Our most recent buy side liquidity is going to be here. And then we have above buy side liquidity here. And that's all I'm going to chart on the weekly as far as buy side goes. If we were to get above 269, we would start looking at additional buy side, but we're not there right now. And then as far as sell side liquidity goes, I'm going to go down here. And then I'm going to look at this low. And I'm going to look at that low. Okay, so we have 212, 206, 194. To the upside, we got 252.82, and we got 269. Okay, So those are my next draws on liquidity for buy side or sell side. Now, if you double click on these, you can also label them so that you know what they are in reference to your chart. So we got BSL, right? Buy side liquidity. We got SSL, sell side liquidity, right? SSL, sell side liquidity. Same thing, SSL, sell side liquidity. Okay, so we got those marked off. Next thing we're going to do is we're going to look at on the month or on the weekly time frame, we're going to look at equal highs and we're going to look at equal lows. We're going to see if any of those exist that have not been traded into yet. I don't see any equals. You could call these relative equal lows right here, but I'm not going to mark these. They're not extremely close, but they could be considered where we haven't traded back down to them. But they're not close enough for me to mark off right now. And then we're going to look at fair value gaps, any fair value gaps that exist that have not been closed out. And a closed fair value gap has a candle that has closed outside the boundaries of that fair value gap. So right off the bat, you could be using an indicator for this. The new Pine Wave indicator for premium users is a good one if you're not a premium user on this channel, to get that new Smart Money Concepts indicator, which I'm going to be doing a future video on how to use that indicator because it seemed like there's a lot of interest on that indicator specifically. And I worked with AJ. I know AJ is the one that created it. I worked with AJ a little bit to try to develop that because Smart Money Concepts is something that I practice and the way I trade. So we're going to be doing a video on that to let you guys know how to use that. If you're not a premium member, the Smart Money Concepts by Lux Algo is a free indicator that you could use. It's also going to be able to show you fair value gaps if you don't know how to find those yourself. But out of the gate, I can see right here, there's a fair value gap that hasn't been closed. And that's a bearish fair value gap. And then right here, we're still inside of this giant bearish fair value gap as well. I'm not going to mark that because it's going to make my whole screen red. But if we take our horizontal levels tool, I'm going to take this wick. So this is the way you find fair value gaps if you aren't aware. It's a 3 candle structure, and you're looking at the difference between 2 candles. Okay, here and here. In this case up here, it's this candle wick and this candle wick. We're looking at the difference. So this is the result of what happens when there is an inefficiency in price delivery. So you can see price traded down, back up, quickly delivered down, price traded back up, has not been able to fully balance this price range out. Now we do have this candle here that came right to it. So one might consider that closed. We might not consider it closed. Irregardless, the point of these is that we will trade back into them to find liquidity, and if we deliver away from them, we will oftentimes pull back into them in order to rebalance price. So right here, right, we traded away from it. Now we're trading back up into it or towards it. Here we had a giant one. We traded away from it. Now we're trading back into it. So just good to know what those are as far as why price tends to return. They're a lot like dark pools where they end up being magnetic. So we got our buy side, we got our sell side, we got our equal highs and equal lows looked at, we got our fair value gap on the weekly time frame. So the next thing we're going to do is we're going to drop into the daily time frame. We're going to look at the key levels. PD means premium discount arrays. Arrays are just horizontal levels. We're going to be looking at optimal trade entry, which is a very specific Fibonacci trade entry that is more or less the golden pocket, but we look at it as the 62% to the 70.5% if you're using Smart Money Concepts. We're going to be looking, so on the daily chart, we'll look at the optimal trade entry, and then we're going to develop a daily bias, and we're going to look at high time frame points of interest. High time frame points of interest are going to be anything beyond the fair value gaps and the horizontal levels that we already have. So let's go ahead and drop into the daily chart. Okay, and then our little screenshot here doesn't drag with us, so we will pull it with us and see what we're looking at here. Okay, so on the daily chart, we're going to first look at premium discount arrays. Premium discount is just going to be based on where we are at on a premium discount cycle. Premium discount theory is looking at what swing points that are above and below the 50% level. So what I'm going to look at is I'm actually going to look at this move here as being our most recent premium discount zone. And I have a Fibonacci setting that's already set to do premium discount. I would suggest you do it just so it's easier to figure out, but you can use a regular fib tool as well. I have mine set to be colored ranges. So mine's at the 50% and the 0 and the 1, and it gives me a premium or a discount zone. So if I'm looking from this swing low to this swing high, I can see that currently price is in premium. Okay, we already have this level of buy side liquidity marked off from the previous week that we were in. And so I'm going to look at this premium array to sell side. Mark that off as sell side liquidity. And that came from 2 weeks ago, so that's not the previous week low. Okay, I'm also going to look at the equal lows that came from last week, and that's going to be our previous week low. Previous week low is PLW if you're annotating that with words or letters. So we got our previous week low right there. We got our sell side liquidity. Okay, we're still in premium. So premium discount theory does look for price to trade up from discount to premium, potentially back to equilibrium, maybe even back to discount, and then continuation through premium. Or if the move is down, we traded from discount to premium, and we're going to expand discount even further. So different ways you can watch that, but we're basically looking at swing highs, swing lows, and then where we're at in the premium or discount cycle. So again, this could come back down and then expand on the premium side to take additional liquidity. But as far as our arrays go, we got premium arrays on the sell side right here. And then we already have our other levels marked off. These are other sell side liquidity targets from other things on the weekly chart. So not too concerned about those, but those came in weekly candles that we already labeled. And then again, we already have this buy side taken, or this buy side listed there. So then we're going to look at the most recent optimal trade entry. So the most recent optimal trade entry, it wasn't perfect, but I'm going to share my custom optimal trade entry level settings with you. You can find those again on that Smart Money website that I posted in the chat. But here's the levels. You got 0, you got 1, you got 0.5, you got 618 or 6.2. Actually should be 6.2. And then 705. And then you got negative numbers, negative 0.27, negative 0.62, negative 1s. Those are going to be your extension levels. I'll show you here. Okay, so our most recent optimal trade, entry was here. Came back down to that 62 just a little further. So that's an optimal trade. Okay, and then we were seeing the extension to the upside. So we have that listed as our most recent optimal trade is right here. You can leave it on your chart or not. It's just important to see where we are at in a cycle. We had a previous optimal trade here before we saw the extension. Now we've seen this optimal trade. We have not seen the full extension to symmetrical swing, which would also put us inside of that weekly fair value gap. So that's something that we do watch for, is for that on the daily chart, for that move to fully extend to the -1, which is called symmetrical swing. That's minimum objective that we're looking for, and sometimes can be deeper. And I'll show you what that looked like on the previous move that we had. So we had this guy right here that traded up to optimal trade entry right here. And we saw almost a full extension down to symmetrical swing before we saw the reversal. So again, that's what we're watching for, is we're watching for that move to come back down to our full symmetrical swing target, or pretty close. I mean, if you start to see some kind of indicator of a reversal before we hit that, then you could consider that negated. We may or may not ever come back for it, but that's what we're really looking for, is for that symmetrical swing to be hit, and then for price to reverse after that. And then on our daily bias, for those of you who have joined me in the past, you've heard me talk a couple different ways about daily bias, but I've done a little bit more looking into daily bias. And the way that Smart Money Concepts teaches it is to just look at the previous day and determine where we're at, if we're trading above or below the high or the low of the previous day. So that develops your bias. That doesn't mean that price is going to go in a specific direction, but that's the bias we need to have. So when we're looking at price here, okay, we had an opening price at 245 nearly on Thursday, and on Friday we traded below the high of that candle. Even though we traded up and the candle was bullish, we are still daily bias bearish because we have not broken above the high of that previous day's candle or closed above that high. So when we're annotating that on our chart, we can say daily bias is bearish. And if you're tracking this in a notebook and you don't want to put it on your chart, just write it down. Or just write down that your bias is bearish. Just because we want to check that, but again, if Monday comes out and we close above the low or the high here, then our bias for the next day changes to bullish. So just that's the way that Smart Money Concepts teaches how to develop your bias there. So we got that, and then any other high time frame points of interest that we're going to look at. So high time frame points of interest that aren't already on there. I think that we've got everything covered for the most part. You could look, well, we've already traded through that. So that's no longer a high time frame point of interest. I guess we have this volume imbalance that has not been all the way traded through. So that might be considered. But if you look at where those points are, it's just slightly, this one here is just slightly higher than this one, and this one here is slightly higher than this one. So they're basically, we already have levels at that point, so it's not worth annotating. But that would be a high time frame point of interest, like a volume imbalance or some kind of other gap that isn't already labeled on your chart. So if we drop down in the 4-hour chart, again, we're looking at additional premium discount arrays. We're looking at any additional optimal trade entries, and we're looking at market structure shifts. So let's go to the 4-hour and see what we got going on there. Okay, so again, premium discount arrays. We've already got the majority of them on our chart. We'll just adjust those slightly. And we have another high there that we're going to put. We got equal highs there, and those are on premium side, but they're also buy side. So I want to mark those off as green so that I can differentiate those. So I got buy side right here. That is another premium array that was not on our other chart. And now these are all relative equal lows, so we don't need to put another level there. Then we're looking at, again, optimal trade entry. Our most recent optimal trade entry was here. We have not seen, I don't think, an optimal trade entry that reversed. Nope, we have not seen that yet. So something that we could be watching for is by taking this high and this low, and we could be monitoring, and this isn't going to go on your chart, but we could be monitoring trading into this optimal trade entry range here and seeing if we can catch a reversal. It's right here where buy side liquidity is, and it's optimal trade. So Smart Money Concepts teaches how to take low risk entries. So if you were to be monitoring this and you were to be looking for price to not go above into this fair value gap, which I think it probably will, but if this was the way you're trading it, you'd be setting your oh, that's the wrong tool. You'd be setting your stop loss, if and this would be in shares, not necessarily in options, but you'd be setting your stop loss right above the old high, and you'd be setting your take profit at the old low, and you have like a 2-to-1 risk reward ratio by taking that trade in the optimal trade entry area. So you'd be risking about $7 for a $14 gain on the share price. So you can do the math as far as what the options profit or loss would be on that. But I don't think that's necessarily going to happen. I do think we're going to trade into this fair value gap up here. But something you could be watching is to see if we do. Maybe we trade up into it and then we start to sell down from it, and that shows us maybe that there's some willingness for that level to hold. Then you could try taking that short down to these previous lows, potentially all the way down here. So just something to watch. It hasn't been confirmed yet. Right now, we've seen the most recent was this high to this, or this swing low, swing high, swing low, optimal trade entry zone, and then we've seen the distribution from there. So optimal trade entry, and then market structure. So things we're going to be watching with market structure. We took this high here previously in a few weeks ago, right? This was a change of character. Here we had a break of structure. If you're going to be using the Smart Money Concepts indicators, they're going to label these for you. I'm going to just show you what they are so you can see them. Okay, change of character, break a structure, break a structure. Okay, we have not come back down to take this structure right now. We've held it. If we were to come trade down through that, that's going to be a change of character that's bearish. And what we'd be watching for, if that was the case, we'd be watching for price to trade down through it, back up, and then like that. Okay, but right now this level is held, so we have no reason to believe that that's actually going to happen. We just have change of character, break a structure, and if we head higher, there will be another break of structure here. So that's structurally, as far as market structure, MS, market structure, that's where our market structure is at right now. Okay. Then we'll drop into the 1 hour. On a 1 hour time frame, we are identifying the market maker buy or sell model. We're also looking at fair value gaps. We're also looking at previous day high, previous day low. Let me see if I can grab the market maker image real quick from the Discord. And then I will throw it in the chat for you guys. Let's see. Market maker model. So market maker model can be on all different time frames. What's important about the market maker model identification is that you pay attention to the time frame that you're using to trade for how you're identifying the market maker model. So in the chat is the graphic for the market maker model, how to identify it. So we are looking at market maker model on the 1 hour time frame, which is then going to identify on a 1 minute time frame, or we can also look at the market maker model on the 1 hour time frame, and then look at the weekly premium discount arrays instead. So it just depends on the way you're looking at it. So if we're using the 1 hour chart, then we're going to go back and reference it on the weekly chart, where on the weekly chart we're going to have traded into up into a fair value gap. So on the 1 hour chart, we're looking at market maker buy model, and we're looking for a trade back to a fair value gap, and then that's going to identify whether or not that has changed. And so the most recent one that we have that we can see on the 1 hour chart is going to be we're on the 4 hour chart. Let's go to the 1 hour chart. All right, there we go. Okay, so the most recent one that we had was this move here, where when we came down, we traded into a fair value gap here, and that is our market maker buy model, which has taken us higher. At this point in time, we don't have a confirmation that we're in a market maker sell model, and what we're really looking for is we're looking for price to deliver up here, catch a reversal, and at that point in time, we'd be looking for the potential of a new market maker sell model setting up on these time frames. So currently, although the cycle may be close to ending, currently we are in a market maker buy model. And we called this out a while ago. So those of you who haven't been listening for a while, when we had this move back down here, from here to here, and we came back down here, we were looking at market maker buy model already. And even for those of you who have been around for a while, on a smaller time frame, right in here, we actually saw a 1 minute, 5 minute market maker buy model be confirmed, which then has led us to continue up ever since that point. So being able to identify these models can be really helpful no matter what time frame you're looking at. But again, now we're in the market maker buy model. We got a daily bias bearish. We're looking at the 1 hour time frame. We're also looking now for additional fair value gaps, previous day highs, previous day lows. So let's go ahead and mark those off. Those are things we don't currently have on our chart. You make this smaller. All right, so let's find our previous day high. And that's going to be from Friday because we're heading into Monday. So we don't care about Thursday. We care about Friday's high. Okay, we got our previous day high there. And then our previous day low is currently already listed. But we'll throw it on there so that it extends. And that's going to be previous day low. It's also the same as our previous week low. They're basically about the same price. So you don't need to put them both on there if you don't want, but I have it on there now. So this is our weekly and previous. Well, no, this is our Friday range. So on Monday, come Monday, we're going to be looking to see do we take that high or do we take that low? But that gives us our most recent range from our previous day. And then, yeah, we got our previous day high, previous day low. I don't see any, let me see. I don't see any major fair value gaps that are in on the 1 hour time frame, but you could mark off one. And we're going to look at just this tiny little one right here. There is a bullish fair value gap right there. And so we're not too far off of it. So we'll see if price respects it and then heads higher off of it, or if it just starts heading higher. It might come back down to test it. There's a little bit of liquidity there, and then we could see price rally off of it. But oftentimes, again, how those fair value gaps work is that they repel price. Now, because it happened near the end of the day and on Friday, we may see that just get invalidated early on Monday. But we want to have it on our chart regardless, because if we come back down to it and we find support right at it, we could see it rally off of that. Off that point. So we'll have it on our chart, 1 hour fair value gap, and then we got our previous day high, previous day low already. The last things we're going to look at, and these things are not as relevant to setting up your chart ahead of time, but they're things that I want to show you guys. And they are intraday structure, London and New York kill zones, and price entries. So this is a little bit more advanced stuff, and I haven't been showing you guys so much of it on the pregame show, but I do want to pull up and show you guys how you can use the London and New York time macros in order to help you identify trade setups, right? Because the 15 minute, the 5 minute, the 1 minute are all going to be, 15 minutes is going to be your high time frame when you're trading the 1 minute. So if you look over in the chat too, where I showed you guys that graphic, if you look at the 1 minute market maker buy model, that means that's going to show you what your high time frame points of interest are as well. So when you're trading the 1 minute chart for day trading and scalping, you're using the 1 hour and the 15 minute chart as your high time frame points of interest, or where you're finding your high time frame points of interest for liquidity. And so let's go to the 15 minute chart, and I'm going to show you exactly what I mean by that. So I'm going to grab a different chart layout for this. This has a bunch of indicators that I'm using. And so we'll pull it up here. Hold on a minute. I got to find the right one. All right, so let's go to the 15 minute. Okay, so if any of you guys have questions about these indicators, I can definitely help you find the indicators that you need. But this indicator specifically that I'm looking at, it shows me London range, it shows me New York open range, it shows me New York lunch range, it shows me New York PM range, right? I also have my Smart Money Concepts indicator on that I have set the fair value gaps on the 1 hour time frame because I'm trading the 1 minute time frame. So I care about what happens on the 15 and the 1 hour. Other than that, what is happening is not as important to my trading on the higher time frame charts. I do care about watching them, for longer term positioning and stuff. But as far as day trading goes, I don't care about anything over the 1 minute chart. Specifically, I look at the 15 minute. So when I'm watching the 15 minute and I'm looking for those kill zones that I was just talking about, something I'm watching for is this London range right here. And then I'm looking to identify liquidity. Okay, and there's liquidity here, and then there's liquidity here in this low. So when I'm watching those, I'm seeing the London range. I'm seeing price delivered down to liquidity. So when that liquidity gets taken on the sell side, then what I'm looking for is price to deliver in the opposite direction to the upside. So when I'm here and I'm looking at intraday structure and I'm looking at London and New York kill zones and I'm looking at price entries on the 15 minute and then even down to the 1 minute, I'm going to show you guys again how those are important. So here's our London kill zone. Here's our New York kill zone, right? Price traded down to liquidity. I'm looking for price to rally. You can see here, and I teach a lot about this, and I'll teach more about it. Or if you guys have questions, let me know. But this is the silver bullet time macro inside of the New York AM Open. So now when I drop down to the 1 minute chart, I'm going to show you how these are even more important to be watching. Okay, so I know what my time macros are. I know the areas I'm looking for. I've seen price deliver to the sell side. We're in the New York kill zone. We're in the silver bullet. One of the things I'm looking for is a Fibonacci retracement into the optimal trade entry to take the position. Okay, right here is optimal trade entry. Right? So this is why time macros are important. Okay, in the silver bullet, down to optimal trade entry, and I'm looking for price to deliver up through my fib extension levels, right, and potentially to my London high. Now, if you don't have pre-market, if you don't have your pre-market turned on and you're not tracking London kill zone, you would never know where this high is. And look where price delivers, just right through that high. Right? I was trading this position. It went over from here. I didn't get a perfect exit because I was at work. I exited back over here, but over 115% on that trade from down here to up here on Friday. Right. And so that's where that comes from. If any of you guys who have been following were ever curious when you're like, oh, why do we skip over the intraday structure, the London, New York kill zones and the price entries? Because it's hard to show that when we're setting up a chart. It's kind of irrelevant because it's happening live. That's happening in live time. It doesn't do us much good to go back and look at, intraday structure on a 15-minute chart from price that already happened. Unless you're just studying it for reference of why price did that or what price did in reference to it, but when we're live and we're on a 15-minute chart, it's very important to understand these different zones, this London kill zone, this New York kill zone, this silver bullet time macro that's inside the kill zone, your London or your lunchtime, because oftentimes you'll see a reversal happen during lunchtime. Well, this indicator gives us a nice clear image of where that lunchtime time macro is. So again, that's kind of what we look for on that 15-minute and that 5-minute chart, is those kill zones, those price entries, which are usually fib levels or fair value gaps, and then intraday liquidity grabs and market structure breaks. So again, market structure break. We had a low. We took that low. That was a break of structure. Came back up, took this high, change of character, traded back down, came up, took it, break of structure, larger break of structure right here. So those are also what these are: intraday liquidity grabs, market structure breaks. So not something that you're charting on your chart heading into the week. These are things you're charting on your chart or observing as price is going through them through the intraday or throughout the trading session. Is there any questions before we go ahead and, oh, I see, have extended trading hours turned on TradingView will allow us to see that data. It'll allow you to see the structure of that data, right? You have to have an indicator to have these boxes on that I have on, and I will show you because I'll take them off. See? Those are my kill zones. That's a smart money concept. You won't see that taught anywhere else any other way. But those kill zones are important to understanding, price action during those time frames. Also, my silver bullet session, right? Again, another smart money concept. You see them turning on and off. That's the silver bullet time macro. There's going to be a good setup inside that time macro every single day. So if you don't have your extended trading hours turned on, you're not going to see any of this price move. And what you're going to see is price close here, and then you're going to see price, open wherever it opened over here, and you're going to see that there was a gap there. We may be looking for that gap to fill or whatever, trade into and run away from. Doesn't matter how it operates. But for the point of what I was just showing you, where you're looking for a silver bullet entry, you need this information here. Right, and as I teach the silver bullet more, or you guys study it by watching ICT videos on YouTube, which you can find very easily, you need that information because you need to see this structure that price was delivered to the sell side liquidity, because you develop your bias towards where the next move is going based on where the last run on liquidity was. Well, this run on liquidity was to the sell side, so we anticipate that we've just taken sell side. Now we're going to head back up to buy side. There we go. There's the move back to buy side, right? Back to our buy side liquidity right there. So we need this information. I used to not have extended trading hours turned on. I've turned them on and I've noticed a significant difference. Even though we're not able to trade options specifically during those hours, there's important things that are happening as far as liquidity being taken. Yeah, no problem. So we got about 15, 20 minutes left. I'm going to jump into SPY because I know there's a lot of other people who don't trade Tesla at all, and they want to know the same information, but they want to see it done with SPY. So let's go ahead. I'm going to turn all my indicators off. All right, here we go. Let me grab that tool again. So for those of you who are late or didn't catch the information the first time, in the chat, the proptrader.co slash ICT smart money website's in the chat. We're taking the tool that they have in there, which is a time frame analysis table, putting it directly into our chart. We're identifying the next draws on liquidity. Those are buy side, sell side, equal highs, equal lows, and fair value gaps. Okay, so first thing we're going to do, we're going to look at buy side. I think this buy side got taken right here. So that's the equal high. Excuse me. So we're going to label these differently. This one's going to be equal high. This one's going to be buy side liquidity. Okay, and then our most recent sell side is right there. Okay, so we got equal highs right now, currently. Coming from the week we just ended, we got buy side right here. We got sell side right here. I'm going to put that one on there too. This is buy side right there. Okay, buy side liquidity, which this move has been a failure to deliver on buy side. This is also another important concept to understand. Okay, when we fail to deliver, we're likely to head back to deliver, right? Price doesn't not deliver on liquidity. If it fails, it's because it was manipulated to not hit liquidity to come back and take liquidity. So look at how this looks, how this is engineered, right? When we come up here, buyers think we're heading up here. So the late to the party buyers who are getting in here, they think that we're at least going to 462. And then immediately we get a sell-off, right? Only to just rip it back and then to come back to take that buy side. So we will hit that. I think we'll hit it this week, 462.62. So be watching for that, because I think we'll deliver and then we'll see price come back down. Everybody's waiting for this to roll over, right? Everybody's like, oh, SPY and QQQ, they're like blown out. How can they keep going? They will. Watch. They'll take this liquidity level, right? And probably trade maybe into this wick here. I don't think we'll take the new high. We could, but I don't think we will. I think we're just going to take that liquidity level, boom, roll back over, probably trade into one of these fair value gaps, and then maybe continue higher up to 480 or something like that. But anyways, that's speculative. I don't want to get in the weeds too much. So we got buy side, we got sell side. We're looking at equal highs, equal lows, fair value gaps. So we got our equal high here. I don't see any equal lows that are relevant. There is one down here. It's below. I'll put it on there, but it's below our sell side liquidity. So it's kind of irrelevant. We're not very close to it. Equal lows. And then we're looking at fair value gaps on the weekly time frame. So I'm going to do them as levels instead of boxes. But here we got a bullish fair value gap right there. Okay, so got our fair value gap. Haven't traded back down into it. Again, that's what I'm saying. I think we take this buy side. We'll probably come back into this fair value gap and then head higher from there. All right, and so that's what we got on the weekly time frame. Let's drop down into the daily time frame. Okay, let's grab our little guy right there and start to take a look at daily. Okay, on daily, we're looking for premium discount arrays, optimal trade entry, developing a daily bias, and then high time frame points of interest. Okay, so our daily bias, I can already tell we traded above the high or the low of the previous day candle. So daily bias bullish. Okay, premium discount arrays. So on the premium discount, I'm looking at this move here. Actually, I'm looking at this move here. And you can say we're in premium. Most likely we'll expand that premium. But anyways, premium discount is below the 50. We're in premium above the 50. So we are looking at any arrays that are of interest. But we already have everything marked off. So this is equal highs, got our equal lows. We already have this as a fair value gap, even this though it's a low here, which would be also a sell side array. We already have a level there, so it's irrelevant to put another level there. So we got that. We're looking at optimal trade entry, daily bias. We already got that. High time frame points of interest. Okay, so I don't see any recent optimal trade entries. So the most recent we have, we've already traded back to it, but I'll show you here just so you guys know how to develop that. Okay, swing high, swing low, traded back to optimal trade entry right here, right? If you were entering back in this position, you'd be targeting here and then targeting potential symmetrical swing, which we did not quite hit. That's the most recent. We have not seen anything since. Okay, we didn't even come close. We've just had a face rip and rally. So we have not even caught a high that we could mark off as a potential reversal. So we will be looking to see if price comes up to liquidity, right, or where we end. Then we'll be looking for a return to this Fibonacci level, and then see if we push higher from there. But we have not caught anything meaningful that looks like it's going to reverse yet. That will bring us back down into this level. So we don't have an optimal trade entry that we're targeting because this move already happened and now we're trading above these levels. And so we'll be looking for price to top, come back down into our Fibonacci levels. At that point, it's a low risk entry to go long in the golden zone or the optimal trade entry levels. Daily bias, got that. High time frame points of interest. We got a lot of gaps here, but those gaps are mostly inside of this weekly fair value gap. One last thing I'm going to put on this chart is I'm going to put this imbalance right here. So everybody does their gaps different. The way that Smart Money Concepts for an imbalance, we're going to look at the area between the wicks here. I know that price closed down here and opened here, so the true gap would be this candle close to this candle open. But what I care about is where price is traded into or through, and what I see is that price has not traded through this void or volume imbalance right here, and so that's what I'm going to mark off. I'm going to put daily volume imbalance. Okay, so we got our volume imbalance there, right? So now we're going to look at the 4-hour chart. We're going to see what the 4-hour chart has going on as far as our Smart Money Concepts time frame analysis goes. Got our bias is bullish. We're looking for premium discount arrays, right? We have our premium discount zone here, seeing if there's any areas that we do not currently already have levels on that we can mark off. So we do have a sell side level right here. Sell side again is always on the bottoms. Buy side is on the tops. So we got a sell side liquidity there. And we have equal lows right here that we haven't come back for yet. Equal high, equal low theory. Equal highs and equal lows get taken even if they seem like double tops or double bottoms. Eventually they'll get come back for. So do anticipate that we will see these equal lows here returned and taken once we see this move, and then we see that return to optimal trade entry, we coming down to target those equal lows. Optimal trade entry, again, we looked at that. We haven't seen one yet. And then on a 4-hour chart, we're looking for market. We're just looking at market structure. So the most recent market structure is we saw this change of character. Then we saw this break of structure or a larger swing external change of character. Because there hasn't been much drops, there hasn't been a lot of opportunity for true break of structures. Break of structures usually happen when you see a swing high, then a dip down, and then we take that high. And you could say right here is a really small break of structure. Right here is a really tiny one. And then right here is also a very tiny one. So those are breaks of structures. These are bigger, like external change of characters, if you will, or larger break of structure, like this move here. That is a larger break of structure as we trade it up to it. So there's our market structure. Then when we're identifying our market maker buy or sell model, on the 1-hour chart, we're looking at fair value gaps, previous day high, previous day low. So let's drop into the 1 hour. And let's see. All right, so on the 1 hour, let's look for Friday's price action. Oops. All right, so Friday, here we go. Okay, so it looks like Friday's low. There's Friday's low right there. So that's going to be our previous day low. Then we're going to look at Friday's high, which is right there. Previous day high. So that's going to be our range to look at come Monday. If we break above or below, we'll be interested to see that. Then we're looking at market maker buy or sell model. Okay, that comes from the most recent optimal trade entry. So again, we haven't really seen any evidence of a true market maker buy or sell model. And so I can't in good faith say we're in a market maker buy model mode. But we are just rallying. It's kind of unexpected. Now, what I would be looking for is, because we have a lower high here, higher high for some kind of top. Again, I like this liquidity to be taken. Then for us to come back down and set a higher low, that would be then the confirmation that we are in a new market maker sell model. But currently, no confirmation of that yet. So I can't put that we're in a market maker buy or sell model on the 1 hour time frame because we just haven't seen anything recently develop that would show that. Also looking at fair value gap, previous day high, previous day low. Okay, we got the previous day high, previous day low. Most recent fair value gap that we're watching is this one right here. What we want to see on fair value gap is for price to trade back to and repel away from, or just straight repel away from it, and then we'll look for price to return to it. So we got that. Then we also have a much bigger fair value gap that is going to be our next area of interest for price to draw back down into. So we'll be tracking that, have that on your chart for 1 hour time frame for sure. This one's very small, less relevant. Right? I do expect that we'll see price draw into or just run away from early Monday, maybe Tuesday, maybe even Wednesday. We'll see. But I do expect that we're going to see price move away from that fair value gap up to 262, 263, right? And then potentially come back down, be pulled back into that one, and then potentially even further be pulled into this one. So sometimes you guys see me post some little icons in them. I like to do things like throw a magnet in there, right? Remind you that price is going to draw into this. We're repelling away from it right now. We'll draw back into it. I see a question. Would you say RR is best to the downside provided the market structure present? I think that just depends on your entry and how you're playing a position, right? Your risk reward. I mean, once you're above equilibrium, the further you are into premium, the higher risk is to the reward of the position, right? We're looking for lowest risk, highest reward, highest probability entries. But again, as you start to see price go into premium, that's not where you necessarily want to be buying. And its relevance is to how you're entering and how long your position. I mean, are you swinging? Are you playing leaps? Are you just day trading? Right? Because if you're day trading, we don't care that we're in premium on the 1 hour time frame. But like if we're taking swing positions and we're looking long term, this is a horrible spot to enter, right? If you're playing the 1 hour chart and you're looking for 1 month, 2 month positions, yes, I don't know how to pronounce your name, but yes, you'd be looking to look for some opportunity to short enter into this because we're in premium, right? Above equilibrium up to 1, we're at premium. So this is your reward on this would be, again, targeting 262 and some change, or like above, potentially 480 at that next buy side liquidity. But your downside that we're targeting would be 409. So the difference between, the reward here versus the risk, where the reward to the downside, we'd be looking to retest this low, much higher reward based on your risk reward. So it just, again, it depends on what time frame you're trading, what kind of positions you're trading. But if you're looking to go long at the top, that's where you get bag holders, right? We want at least a correction down here to start a position, or a correction down here in this weekly fair value gap, right? Ideally, your entry is going to be being patient if you're trying to do long term and seeing if we get back down to this right here. Okay. Minimum objective would be to build a position long starting here, maybe trade into this fair value gap or down into this liquidity level to get your entry. But if you're trading, if you're just scalping options on the 1 minute chart, the only thing you're looking at on a 1 hour chart is where your liquidity levels are. And you can certainly go long on a day trade, even though that we're at the top, because we're anticipating that we're going to hit 262, right? And we're only at 259 right now. So if you're anticipating that move to the most recent buy side, your reward is still pretty good on a 0-day options contract for a $2 move. Where on a swing trade it'd be different. So I hope that answered your question. Prometheus, more on the meaning of fair value gap. Fair value gaps are where price is inefficiently delivered and there leaves a imbalance so the market is meant to be balanced. The market algorithm's meant to balance price. And so when you see price rapidly deliver in one direction, so I'm going to use this one right here as an example. Right? We were kind of just chopping around. This is 1 hour. In 1 hour, we see price inefficiently deliver to the upside, and we have not seen price come down and rebalance this zone out. That's what leaves a fair value gap. It's just inefficiency in price delivery and an imbalance. So what we know is that eventually we're going to see that traded back through as price wants to rebalance this zone where there was lots of orders that probably didn't get the opportunity to be filled. And for efficiency, it wants to be balanced. So I don't know if that answered your question, but it's on all time frames, and you often see, again, price will deliver away from, price will deliver back to, and it's really the fact that the market algorithm is built to efficiently deliver price to the areas where liquidity sits and in what is considered fair value. So let's look. We're on the 1 hour. We can't identify a market maker buy or sell model right now. Our fair value gaps of interest, this small one here, this big one here, and then we got our previous day high and low. So the last thing I'm going to do is we'll look at the 15-minute chart. But again, I don't. The 15-minute chart is literally just for intraday. We're just going to be reflecting back on price, but it's not going to give us much insight as to like where price is going to go into the future or give us much reason to have it, because all of the peaks and all the valleys are going to already be on our chart on that time frame. But we'll still drop into it because we want to look at the same thing we looked at on Tesla and see about the silver bullet and the time macros and why they're important. So let's turn that on. Let's turn that on. And our liquidity levels. Okay. So similar to Tesla. Okay, and this is more apparent if you watch it on futures, but it's also relevant when it comes to SPY as well. So we have our London session here, right? This is a kill zone. We have a range here. We see manipulation to the downside deliver into liquidity. What I want to notice here is we have this and we trade back down to it almost perfectly. This block here becomes our mitigation block as we trade down to it. This block here mitigates price. Okay, we deliver on liquidity, manipulation, and then we see our distribution to the upside. And what we're looking for is our time macros to be important. Again, I'll do a more in-depth video soon about silver bullet setups. But if we zoom in to our silver bullet time frame, okay, and we saw price deliver down to liquidity, then we look for price to come up and then come back down to fair value or not, to optimal trade entry, and then potentially into a fair value gap. So this is why we watch our 15-minute and our 1 minute. Okay, there was our fair value gap. Here was our swing high, swing low. Okay, we traded through. Right here is our optimal trade entry. Okay, we traded through it and we traded down into a fair value gap. Either one of these would be just fine entries, and then you're targeting the previous high at 0. Right, so if you take this entry the way it's meant to be taken, You take it here. You set your low below the old low. You set your high at the 0 fib, and you got nearly a 2-to-1 risk reward, right? If you set it right at the old low, you basically got a 2 risk reward perfectly. So again, you enter into the optimal trade entry, right? We don't care that it went a little bit lower. If it goes all the way low, we got stopped. Oh well, right? We look for another entry, but we take it in the optimal trade entry. And then if it comes down to this fair value gap, you can add to your position, right? Imagine if you entered here and you averaged down here and then you had the same target, right? We never got stopped. We rallied up. We came back down. We ran. This is a stop loss raid right here, right? Boom. Ran the stops on this and then we delivered. So whatever. But your entry's here. Your first exit's here. Right? You never got stopped. You hit your objective target. Right? Beyond that, you can see this trade actually hits full symmetrical swing. Okay, if we extend that over, bam, right there. Right, full symmetrical swing. So if you're playing this, the way I've taught this in the past is that you have right here, price target 1 is at your 0 fib, or return to the old high or the old low that we originally measured. Right, we got price target 2. So this is if you're taking like multiple contract lots or you're trading multiple shares at a time. There's your second exit right there. Okay, your third exit is on the negative 62%. Take profit 3. Oops. Price target 3, however you want to label it. Right there, delivered through it. Okay, at this point in time, I'll tell you guys how to trade this, but symmetrical swing is our price target 4. And these are there's our previous high or our draw on liquidity, which is why it went all the way even through symmetrical swing. But if you were trading this in shares or multiple lots, right, you're taking your position here. For people who are able to trade this, maybe you're taking 5 contracts, maybe you're taking 10 contracts, maybe you're taking, 50 shares here. When you hit price target 1, you're peeling off 50% of your position. Okay, so most of the bulk of what you get is in this move here. You're peeling off 50% here. You're running the rest. See if we get to PT2. Okay, if we do get to PT2, you can peel off 50% of the remaining shares. Now, maybe you get scared here and we come back down to PT1 because you moved your stop loss up, right? We moved through it. We came back down and maybe you took your profit all the way here. No shame in that if that's the case. But if you're running it to PT2, you peel 50% of the rest of the position size at PT2. You peel another 50% at PT3 if you're going to run it all the way. And then lastly, you have a runner, right? 1 or 2 shares or contracts, whatever. You see if you can get all the way up to the symmetrical swing. At that point, you've taken all of your risk off the table. And even if you do come back down to one of these fib levels, you're still in profit on the remaining. Kula says, speak about, hold on, let me go back. Prometheus, I see. So we want to see price go up or down in small increments, not long candlesticks, basically. We don't want to get tricked into buying in the massive candles, or the massive candles are going to leave a fair value gap, and you want to buy before price runs away from that fair value gap. So we don't necessarily want to see it move in small increments. We do want to see it explode. We want to be in the position before we see the big explosion, more or less, which is why, again, like you get this move back to optimal trade entry, right, or into this fair value gap, and then we see little bits of movement waiting for the position to take the run, right? In this trade, you entered, they ran a stop hunt to try to stop out the people who went long here, right? But we know because of the optimal trade setup that we're taking our stop loss at this low, not at this low. Right? They raid the stops, then we see the explosion. Savvy Investor. I already did the first half an hour on Tesla, so you can catch the video. I'm gonna post it right up to YouTube because this week is for all the members of Traders Helping Traders, not just premium. So I am gonna post it right on YouTube immediately. You can catch the first half an hour is all about Tesla. I usually do Tesla first, and then we do SPY afterwards. For those of you who don't know, it's always free for the first Sunday of the month for all. Well, I guess it's going to cost now $3.99 or $3, whatever, to even be part of this Discord, regardless of premium members. Well, premium memberships don't have to pay. Anybody who was on free is going to have to start paying $3 a month if you buy early, because they're moving this to a only paid server to try to eliminate some of the spam bots. So keep that in mind. But either way, the first Sunday of every month will be for all of the Traders Helping Traders members. All the other Sundays are for premium members only. And then I post the video the following day, so on Monday, for anybody who's not a premium member. Beachler, how do you buy premium? There is a type in hashtag upgrade or something like that into any of the chats, and then click on the upgrade button. That's probably the easiest way to do it. Kula also said maybe speak about adjusting stop loss, new order block. What do you mean by that, Kula? Can you unmute? Are you still on here?
Hear me?
Yep.
Well, I was just saying, I wrote that out, and then you really started talking about moving your stop loss up. But virtually what I was looking at is just, talking to people if they're trying to let their runner go, to, virtually have that at your demand, at your OB, your order block there, and don't let it bypass that. Your runner, if you're trying to let it continue to run. Does that make sense?
Oh yeah, absolutely. So let me show you on the chart what I would do if I was trading that and moving my stop losses. I shouldn't probably tell you guys this. I never use stop losses. But if you were, and I know Kula, who has mentored me a lot, is a stickler for stop losses, so I appreciate him bringing that to the table. What I want to show you, right? So we enter, right? Our stop loss starts down here. Okay, we see price move back down. It never hits our stop loss. I'm not moving my stop loss if I am running stop losses. I'm not moving it really until I hit PT1. That's how I would do it. Kula might do it a little bit differently. Once I hit my first price target, where am I moving my stop loss? I'm going to move it here, okay, on this mitigation block. If price delivers down through this previous peak right here, I got no interest. I think we're going lower at that point. We never did. That's where I would have moved my stop loss if I was using stop losses in a trade, right? Because then also when we moved through PT1 and we came back down, we wouldn't have gotten stopped out right at PT1. Now, some people might say, oh, price target one hit, sold 50%, came back down below price target. It's okay. You could take that total, sell your whole position and you're in profit. But I would have moved it to this peak right here as a mitigation block, expecting that we might trade down to it, but not through it. If we trade through it, I'm still in profit, right? Because I entered down here. Then I'm moving my stop loss up because price ran away from that, right? We got to PT2. As we delivered to PT2, I'm most likely moving my stop loss up here, and then I get stopped out on the remaining trade, right? So I took 50% here. I took the other 50% of the remaining position off here at PT2. Then price delivered down through this peak. This peak did not mitigate price anymore. I would have got stopped out on the rest of it, would have missed the run, but that would have been a nice profit. You would have gotten first target, second target. The remaining positions would have got stopped out, right? But in profit, which is the main key, is that you don't want to be letting those trades go negative once they're already so far in profit. So we're at and a little over the hour. I know we started a little bit late, and so I said I would go over a little bit. Is there any additional questions that anybody has? Again, don't forget the recording of this video is going to be on my YouTube. It's Rawstocks on YouTube. I'm going to post it also in here in the video section, and I will be doing an educational video soon on how to use that new Pine Wave script, smart money concepts. I'm not going to do one on retail. I don't use the retail one, but I am going to do a video on the smart money concepts that all you premium members might have received or already received as part of your premium membership. So there's been a lot of interest on how to use that indicator, and I want to make sure you guys are understanding and using it correctly, because just because you have a smart money concepts indicator doesn't mean that you necessarily understand the smart money concepts. So just continuing to try to educate you guys on smart money concepts in general, and also for anybody interested, check out the Inner Circle Trader on YouTube. That's where I learned smart money concepts. Also got a link to a book that helps show graphics and illustrations on smart money concepts. Be happy to share both of those links or information with you. If you do have any questions, you can just send me private DM. I'm really good at responding to those kind of things. Yeah, you're welcome for my time. Thanks, Kula. Glad you joined finally. Yep, we'll see you guys on the next one, and good luck on your trading this week.